Well, in our special segment Value Add, Ekta is focusing on Syngene, the stock that's surging in trade right now. Ekta, over to you.
Well, yes, Syngene yesterday came out with its numbers during market hours. The stock closed higher in yesterday's trading session. It was up around 6% and there is a conference call which is taking place as we speak for Syngene. So let's see what the takeaways would be. But a couple of key important points stood out. The revenue growth this quarter was strong. It was at around 26%. 9% of that 26% was aided by a rupee depreciation. Double-digit growth is what they have said was what took place in the underlying business ex of COVID-19. Now, guidance was maintained. Remember that they guided post Q1 for high teen top-line growth for FY23, EBITDA margins of around 30-odd%, and they expect single-digit profit growth, which is likely to be impacted by financial expenses, tax rate, other income. Now, in terms of demand, they said that there is solid organic growth in the discovery services segment. They are seeing pent-up demand taking place. They're seeing healthy demand from smaller clients, and they're seeing a structural shift take place in the past 3 to 4 years. Now, the big deal is Librela, which is basically a drug used on animals to treat osteoarthritis. It's by the animal health company Zoetis. The company is going to start commercial manufacturing in Q4 of FY23. It's a 10-year contract that Syngene has won for it. The US FDA approval is awaited while they've received European approval, so that's an important factor. And the Zoetis deal contribution is only expected to begin next year. But nonetheless, this is something that the street is quite bullish on. And that's reflective in terms of the valuations. FY23, 49 times based on an EPS estimate of around 11 to 12 odd rupees, and 40 times FY24 if you're working with an EPS estimate of around 14 to 15 odd rupees. We did speak to the management earlier in the day, so let's listen into what they had to say.
So the qualification steps are really getting ready for that manufacturing, having all your plant qualified, getting the regulators both from the European Union and also from the US to come in. That should be happening in the second half of this year. The timeline is difficult to predict. It's as long as it takes the regulators to conclude their inspections and give us the feedback report. If you assume that those are successful, then we're into manufacturing as soon as the fourth quarter of this financial year, and that really then starts to ship and become a revenue driver from the very beginning of the next financial year. Most of our industry, just about everything we price is in US dollars. So if you've seen the US dollar strengthen, that flow back into repatriating it into the rupees is a structural benefit for us. At the 26% growth in the second quarter, you could knock off 9% of that for currency impact. But that still leaves you with pretty healthy underlying growth on a constant currency basis.